Brian Murray is a partner and the chief operating officer of Craft Ventures, a VC firm in San Francisco dedicated to finding and helping the next generation of world-changing companies. In our conversation, Brian shared a fascinating perspective on Bitcoin, Lightning, investing, and the ways in which the Lightning Network is going to be impactful to different sets of people all over the world. I learned a ton from the conversation, and I know you guys are going to as well. Now, before we get into the show, we got a giveaway this episode. Fountain has decided to give away 1,000 sats for any new user that starts using Fountain and listens to this show. So if you're listening right now and you're using Apple or you're using Spotify, go to the App Store, download Fountain, listen to this show on Fountain, and you will receive 1,000 sats within 24 hours. And this is going on for the rest of March. In addition, Fountain is letting me give away 50,000 sats to one listener. And I'm going to pick the listener who sends in the best comment in the next 10 or 15 days through the rest of March. And I will pick one at the end of March, and they will get 50,000 sats. So go check that out and listen to this episode on Fountain if you're not already. Before we get into the show, one more quick note. Today's show is sponsored by Voltage. Voltage is the premier provider of Bitcoin and Lightning node infrastructure. I will have more from Voltage later in the show in the Lightning round, and I hope you enjoy the episode. Brian, welcome to the show. Thanks for coming on. I have a lot of investing and Bitcoin questions for you, but to start off, how about we rewind and start with your background in Bitcoin? And maybe was there any first moment that you realized that this technology was going to be really important?
What's interesting about my story is it was less about Bitcoin itself and more about the Lightning Network that drew me in to the Bitcoin ecosystem. And there's sort of a strange story there. Like a lot of people, I had the experience of buying some Bitcoin back in 2014 or 2015 and then foolishly selling it a year later. And then it wasn't until 2017 that we got involved with Lightning Labs, and our involvement with Lightning Labs is what opened my eyes to a lot of possibilities. And specifically, it was there was like a question I asked myself, which was, if you could transmit any amount of value to anyone, anywhere, instantly, what could you do? And that led me down like a lot of, down the rabbit hole, so to speak.
And what were some of those early things that you thought you might be able to do if you could transmit value in any size?
We're jumping right into one of like the most formative parts of my Bitcoin journey, which was there's this guy I used to work with at Yammer. His name is Jim Patterson, and Jim and I were in Palm Springs at this conference, Crypto Springs. That's where I first met Elizabeth Stark in person, and he and I were getting a drink, and we were asking ourselves that question. And it just so happened that I was also involved in an AI company. Randomly, it was like this AI dentistry company. And so I learned about something called data annotation, which is how these AI models function. It's like basically a ton of humans like creating structure on unstructured data, like drawing boxes around things and feeding it into machine learning algorithms. So my answer to the question was, well, geez, if you can transmit a digital job to anyone on the planet and pay them for the completion of that job without them having to have a bank account, that would be insane. And the amount that you're paying them on a per job basis has to be really small, so the incumbent financial system wouldn't work for that. It could like completely unlock the ability to earn for a lot of the people who are most in need. That was the first big one that struck me. And so actually me and this guy Jim started riffing on, should we incubate something, or what should we do? And I stumbled upon this thing called lndwork.com, which is effectively what I was talking about. And I reached out on the customer support chat. It's like, who are you? How'd you come up with this? Like, they were building on Lightning Labs implementation, LND. And the founder, Paul Etoy, responded, and he and I got on a call, and that started a friendship that's lasted the last several years. And and just a lot more other exciting kind of insights like that around Bitcoin and Lightning.
Very interesting. So was that first use case that you were thinking of, did you have in mind something like Google CAPTCHAs where you're kind of just like clicking and selecting little images, or did you have in mind like a bigger task that could be, maybe you're earning more money that the fiat financial system could support, or was it just entirely those super, super small tasks that couldn't be supported?
As far as my vision went, was just like these jobs are micro, they're little simple jobs, and if you can unlock the labor pool, meaning like if you can pay anyone anywhere, your the number of people who could contribute to the supply side of this labor marketplace could dramatically increase, which gives you a lot of advantages. But I wasn't thinking so deeply on like the workflow itself, like what types of jobs. I just knew that there's enough of them, that there's tons of them, and the more there are machine learning algorithms, the more demand there's going to be for this type of work. But again, credit to Paul. By the way, Paul, do you know who Paul Etoy is? Have you heard of him? Yeah.
Yeah.
So he's also behind Sphinx.
Right. So Stackwork and Sphinx, right?
Yes, exactly. This guy is like insane. His vision is like crazy. He, as part of Stackwork, he built this thing. I forget what he's calling it. It's like Cascade might be what he's calling it. But he can take any job, like a company needs a certain thing done, and then he has a system where you can break that thing down into more incremental tasks, and then he farms them out to this like global pool of labor who just does the jobs, and then it compiles that task up into the bigger task. So his theory is that any job can be kind of like decomposed down to like atomic units, and then recompiled once the individual bits are completed into the output. And it's like parallelizing job completion. So credit to him for thinking through all of that. But for me, it was just I was drawn to this idea of economic empowerment and how Bitcoin alone can Bitcoin plus Lightning can make that possible.
Yeah, and we're starting to see some of that in play right now. We're starting to see people earn money. It's Lightning as an ecosystem is still probably too small to matter on like a global economy, but it's growing quickly. I guess my next question would be, how much impact will Lightning and this ability to earn in any denomination from anyone in the world at any point, how much impact will that have on society, on the whole world?
I mean, I hope a lot. Because there's a lot to unpack there. So for one, it's not like these people who might be attracted to participating in this labor marketplace. It's not like they have no ability to make money. They have local like jobs that they could do potentially, but it creates a opportunity for them. It creates like a check and balance. So maybe they were being extorted in other jobs that they were participating in, or not being paid fairly or whatever. But when you have a money system that can transmit the money directly P2P, like from the supplier to the doer, the worker, then like I said, it creates a check and balance on other employers. So and by the way, there's a lot of extortion in these communities because these people don't have bank accounts. So the only way to get money in many cases is to have to go through somebody who has like an established business, and now they take advantage of that access to the financial system. So crypto there's so much going on in crypto. I don't keep track of everything that's happening, but I'm sort of passionately committed to and following these entrepreneurs that I've kind of met through just exploration, and it just sort of logically makes sense to me that this would be a good thing for the world.
Mm-hmm. Yeah, like Stackwork and these kind of micro tasks is something that I haven't been keeping up with enough, and I feel like I need to spend some time and do a deep dive on that. But I'm curious to know, do you have any insight into like whether or not you think this innovation will create like full-time jobs for people? Is it at that level now in some regions of the world where people can earn a full living or a comparable wage to what they would otherwise be able to get through some of these micro tasks? Or do you think this is going to be like a supplemental thing that people do on the side and can kind of like spread out across the world. Anyone can do it at any point, which means like maybe fees and the returns are typically lower and not quite at the level where someone can make a full-time living at it. Curious to know what you think, where that ends up in a mature state.
Yeah, so there's a lot there. Number one is, yes, it already is comparable to alternative employment options. I think it's going to change the way people think of employment. Like, rather than sitting in a box from 9 to 5, you sort of are, you have an ability to earn in the sort of in-between times. I think where this could go is that it could almost feel like a game where people have their mobile phone and it's almost like Candy Crush, except they're actually like adding structure to data, which is creating value, and they're earning for it. I know that's a direction Paul wants to take this, is like make it fun, and make it so atomic, so like granular that people can squeeze it in wherever. And so they could do it for hours straight if they want, or they can do it while they're waiting for the bus. Okay, so that's on like this micro task level. The same team is already doing this at a much higher skilled level. So they, as I mentioned, they built Sphinx, which is the messaging app built on the Lightning Network, and they open sourced the relay mechanism, basically the protocol by which messages are transmitted on the Lightning Network. And that's an open source protocol, Sphinx Relay. And they have basically, kind of like Bitcoin itself, they encourage developers to, rip it apart, find bugs, whatever, and then they have bounties on those bugs that they pay out in Bitcoin through the same mechanism. So that's just a different type of work, right? It's like computer science work, which it's higher value, so that you'll get paid more for those types of jobs. But it's not that different from drawing a bounding box around a stop sign, in terms of like the process of doing work, getting paid for work.
And so then do you think all work becomes this sort of like you earn periodically for completing different tasks and not on like a salary 9 to 5 stable job? Do you think we transition for the average person working in an office? Do you think maybe they get to the point where instead they're earning for tasks and they're just like doing 2 or 3 tasks a day, no matter how long it takes them, they're just doing enough to put food on their table? Do you think that's like a realistic outcome?
I don't, that if you had like the binary spectrum of the salaried worker to purely task-based, like paid in the moment, like we're this sort of utopian vision that we're describing, I don't think we'll ever trend all the way to one pole. But I do think we're going to shift more towards that direction. So even the concept of gig work is more of a shifting in that direction. Another example that is also, I always find myself talking a lot about Stack and Sphinx, but Sphinx is also a big, they've sort of led the way in this, the podcasting, like streaming podcasts and streaming Satoshis, right? That's another type of like value creation. It's like you might have a podcast or something, and if people can stream you Satoshis for your work, which is creating that podcast, like they're not really paying you for the hours that you're sort of doing outside of it, where you may not be working, but for the hours that they're consuming that content, they're paying you for it. I just think there's going to be a lot more diverse and a more direct relationship between inputs and outputs, or like work and remuneration. And I think that's a good thing for everybody.
Yeah, that's interesting, because another example that brings up is like Hollywood kind of operates in a similar way right now, where you get paid to work on a movie, you do it, you kind of sprint, and then you're done, and you wait for your next gig or your next role, right? Like it's a different scale for sure, but it does have some similarities there, where if you're an actor, you're just looking for the next job already, and you, I guess I could see how that could expand beyond a few industries.
Yeah, just to get kind of meta on this whole thing, I believe for technology in general, I think technology desires liquidity. It desires efficiency. So there's this book by this author Kevin Kelly. It says it's called What Technology Wants, and it sort of postulates that technology is like this living thing that's pulling innovation in a certain direction. And I would argue that direction is largely things that make the movement of information more efficient. And so all we're talking about here is like rewarding contributions in a more efficient manner. And I think technology will reward anything that pulls us in that direction.
That's a really interesting idea, and I appreciate the book recommendation. One other thing this brings up now is the idea of like moving information. It ties in to social media really tightly, and Lightning can now be tied into social media through like something like Sphinx. If you're messaging, we got Stacker News, that's like a Reddit style forum where you can tip in sats. What impact do you think, if any, do you think Lightning has on social media? Do you think that is kind of going to be a main point to disrupt Web 2 platforms? Like, do you think we have tools now to kind of tackle that head on and change the way social media works?
Yeah, for sure. I think mostly because of the whole deplatforming issue. So, and let's break that down, like why that is. So in Web 2, you have these clearinghouses kind of information. So the person who posts on Twitter or posts on Facebook, it goes to Facebook's server and then it gets propagated out to the clients. In Bitcoin and Lightning Network, it's P2P. So there's no central server from which all of the information is being cleared through. And therefore, there's no ability to censor or cancel people. It's its own living thing. Now, you can never have a messaging system or a communication system, social network system on Bitcoin itself because the fees are too high. You have to wait for some number of blocks to clear before you can feel good about a transaction. But of course, Lightning addresses that, so you see things popping up like Stacker News, Sphinx, and other projects. And one of the most important parts of it is that they cannot be censored. They can't be stopped because it's a peer-to-peer network. So it is a little interesting, for people like you and I who get excited about this future, who see it, who can actually participate it to a degree now, but also knowing it's going to take so long and there's so much inertia with the incumbent system, and you're kind of like rebuilding the internet in a different place. And it's just going to take some time. And there's a lot of vexing challenges to get there. For instance, you basically have a duopoly on the ability to distribute technology in the first place between Apple and Google on their app stores and their operating systems. So that's another whole interesting thing that Bitcoiners and people who desire this future are going to need to figure out solutions around.
Are there any... Let's frame this question this way. If you could get every Bitcoin developer in the world to focus their attention on solving like a single problem or a single constraint that's limiting adoption in the ecosystem today, what would that problem be? What would that point of focus be?
Okay, so first of all, if I could get all the core developers to work on something, I would say like don't just keep doing what you're doing, because the most beautiful thing about Bitcoin is like the core and the culture and the ethos of Bitcoin, and not corrupting that. So even the mere question of like someone has control over these people to tell them to do something else, it's like antithetical to Bitcoin in the first place. But what I would say, I wish I could take all of the developers who are working on like crazy ICO get rich quick things and have them shift their attention towards helping expand the network of Bitcoin. And my view is that it's largely through layer 2 things like Lightning Network, Liquid, other things like that expand the potential of Bitcoin. Because it's going to create, it already is, like it's creating if nothing else, it's creating a really good check on incumbent systems, whether that's incumbent money systems and soon to be incumbent communication systems, and that's a good thing for the world.
Now, how do you make that pitch to people working on ICOs and altcoins and other stuff like that? I imagine you get some of that at Craft, people pitching you on different ideas. How do you get those developers to then reframe their thinking to not go after creating new tokens and instead build on Bitcoin?
There's a few ways of doing that. So number one, I think Bitcoin almost draws the types of people that should be drawn to Bitcoin. So if you're the type of person that is drawn to like getting rich fast through an ICO or like selling some NFTs or something like that, like you probably shouldn't be working in Bitcoin. Frankly, like Bitcoin is more, it has this principle of low time preference, doing things right, being very thoughtful about how they're done. Creating something that's going to have a massive impact on the world takes time. Like these sorts of beliefs. If you don't share those beliefs, you'd probably, I don't even try to recruit people who aren't kind of like vibing with those ideas. So now, on the other hand, Bitcoin is not like some like esoteric thing now. People know about it because it's so cool, it's so like impactful that it is drawing a lot of people in. And so you kind of have to find the types of builders who are drawn to the potential of Bitcoin, who really believe in it at the core, rather than just the flashy new thing that some VC poured a ton of money into. And it's a very interesting question, because on the one hand you want to attract as many developers as possible, as quickly as possible. On the other hand, you don't want to Bitcoin or the community shouldn't like disrupt its principles for sort of short-term thinking. Anyway,
100%
that's
agree.
kind of how I feel about it.
Yeah, no, I 100% agree. I'm curious to know how partners at Craft have changed their views on Bitcoin over time. Like, can you talk to me more about how that's evolved? When you first discovered Lightning, were you one of the only ones at Craft who was like pushing for Lightning? Were there others? And then in the last few years, how has everyone else's views changed at the firm?
So crypto in general is not a core part of what we do at Craft. Like, we do a lot of things. In fact, if there is any core thing that we do, it's B2B SaaS, which is pretty far from Lightning work. But we just happen to have developed some expertise in this area. And me personally, I've developed kind of a community of founders that I've worked with, starting with Lightning Labs. And I think early on it was, I think somebody in the firm said it well. They said it was like a moonshot on a moonshot on a moonshot, that this was all going to work. But the Bitcoin moonshot is playing out. The Lightning Network moonshot is early, but starting to play out. And then you have some of these the apps built on Lightning, like a Sphinx or a Stack, and those are starting to play out. So all of these things are starting to play out with gradual degrees of maturity. Bitcoin obviously being the most mature. And the team is all excited about it. I mean, they're seeing it happen and gaining conviction, and there's just more and more like sort of trust, like points of credibility that are lighting up. Everything, I think a lot of credit goes to Jack Dorsey. What he's been doing with Block and Cash App is amazing. And I think those types of things pull a lot of people in the right direction, because it gives, if people aren't going to do the work themselves, like the mental work to get to bedrock understanding of how it all functions, then they need to kind of delegate some things to other people or institutions that they trust. And not saying that's right or wrong necessarily, but there's more of that that's been going on, especially recently.
Mm-hmm. Now, when you guys are thinking about making an investing decision, when you talked about a moonshot on a moonshot on a moonshot, what's that thought process like in terms of like, how do you decide whether to invest, what the right valuation is, when it's such a far out idea? Now, obviously, like it's changed in the last 3 or 4 years, but back in 2018, 2019, when this was a real moonshot, what's that investment process like for you guys?
Well, first of all, we were very focused on the seed stage. So at the seed stage, it's less, you're putting less on the line. It is a smaller investment, and you're kind of like seeing how things go. And for something like this, that gives us a lot of comfort to remain in the early stage investing. But the other big thing, unlike like B2B SaaS, you can kind of like feed a bunch of stats into a machine and it'll tell you if this is, going somewhere or not. But with some of these other Lightning or Bitcoin related companies, it's much harder to do. And so the practice that we've taken is we get to know founders of these companies for a long time before we invest. This is true of Will at Fold. I got to know him for a long time before we invested in a seed, and then we led the Series A of Fold. This is true of Paul, like I mentioned, from Stack and Sphinx, Graham at Voltage, the Nicholas and the team at Galoy, who are behind Bitcoin Beach, Alex Leishman at River. Like, I got to know these people for a while before we made an investment. And what that allowed me to do is get to know them as people. How committed are they? How well do they run their business? Are they shipping code? And is there something real here? Like, it's hard. It's much harder for us to invest in things where it's just an idea, or maybe there's like a beta app, but very few people are using it. Those things are much more difficult for us to get behind.
So you're just looking for momentum behind the founders and getting to know them on a personal level to understand whether or not they are ready for taking on a big task like that?
Yeah, and one huge mistake VCs can do is just get too excited about an idea and like invest immediately without getting to know the founder. Now, sometimes you have to do that in a very competitive investing landscape, because it's its own competition. Like, if you don't invest quickly, you're going to lose out to another investor. Luckily for me, I was kind of involved very early, so I had the luxury of time to get to know these people. And yes, the time gave me the ability to get to know them as people, which is a huge part of investing. You want to work with founders who are high integrity, who have ability to ship, who have ability to listen and evolve their product and their team, and to see and use the products myself, like to confirm that they are, performant, functional, that other people like them. That de-risks the investment massively.
Right. And so now, as these companies progress and as they do follow-on rounds, what's your thought process on whether or not you invest again in future rounds? How do you then gauge that progress? As you said, it's not quite as cut and dry as a SaaS business model, where you have clear-cut like revenue numbers that you want companies to hit. The Lightning business models are still being formed, it seems. So how do you then make a decision on when you should double down and triple down on a company?
Yeah, I mean, this is like VC strategy. There's a lot to this. One is that you kind of want founders to feel supported going into their next round, no matter what. So doing pro rata in their next round is like something that we do basically every time. As a sign of support. And then sometimes we do more than pro rata, and a lot of it depends on what our ownership is, what other investors are clamoring to get in. So like, there have been some Lightning companies where everybody wants to invest, the amount of interest is overwhelming, and if we already have decent amount of ownership, we'll scale back so that they can make room for other people who are excited about participating in this next round, because we've already we've got a lot of exposure to that company to be purely sort of capitalistic about the whole thing. But a lot of it is a tricky part of the business, and a lot of it has to do with just working with the founder and their desires for the round, and our desires as investors to maintain ownership percentages and all that stuff.
Right. Now, your Twitter, your bio reads that you tweet about SaaS and Bitcoin. Do you think these two worlds collide and you get to the point where, do you think a SaaS business model exists on Lightning and it becomes a dominant business model there? Or do you think those are mostly just two separate spheres?
No, I definitely think like Galoy, I just mentioned, they're the team behind Bitcoin Beach. They're basically building Bitcoin banking as a service, right? So yeah. Why, like, maybe they charge in Bitcoin, or maybe they charge in USD. I don't think that makes them more or less a Bitcoin company. It's just a function of how they fund the business through revenues, and that would be a subscription business. Voltage is sort of like the AWS of the Lightning Network. That'll be a subscription model. So yeah, I just think subscription revenue is nice because it's recurring. It's like naturally recurring. Only if somebody decides to churn does it not recur, but it's a flow of funds. It's like an annuity. And that's why we, just in general at Craft, we are so bullish on SaaS businesses, because of like how durable the revenue is. And I think 100%, I think that will manifest in Lightning and Bitcoin companies.
What do you think some of those other business models might be on Lightning? because I think some of it still has not been fully fleshed out yet. There's a lot of people trying new business models, seeing what sticks. If you had to guess, do we come up with new business models that have never before existed? Are any of these business models better than SaaS?
Well, for sure, it's not going to be all SaaS. Like Fold, for instance, they're a payments company, so they'll make money on a take rate of the GMV, or like the gross merchandise value flowing through their system. Lightning Labs itself is still, they've got these products called Loop and Pool. Those will likely be where they monetize that business. Those are clearly not SaaS businesses. It's like a marketplace business. But I think there's going to be a lot, like if I had to squint and guess what the crazy new potential business models would be, I'm starting to see this. This is super early, but basically there's this way of earning yield on Bitcoin where you would lock Bitcoin up in the Lightning Network into a node that is highly connected, and then that node rents out its liquidity through something like the pool, Lightning Labs pool marketplace. So now you have like a riskless way of earning yield on your Bitcoin through the Lightning Network. And people, everybody, like so many people are hodlers anyway. What better way to hodl than to like use it to enrich the Lightning Network, which helps Bitcoin propagate further. And you earn like more Bitcoin on it. Sounds pretty good to me. So that's in terms of, it's actually not a different business model. It's still like a GMV take rate kind of thing, but it's like a unique use of Bitcoin itself to generate yield that could fund a business model.
Right. Interesting. Okay. So yeah, it seems like there's parallels to all these business models in traditional or Web 2 or whatever you want to call it in that world, right? We have subscriptions, we have take rates, we have yield, we have banks, we have a lot of these building blocks are already, they already work, and we already know they work, but I guess it's just applying it to Bitcoin businesses. One other interesting one that's just coming out now, it's Stacker News publicly shares a lot of their metrics and ideas and stuff like that. And one thing they're working on is giving yield to all users through their job board. So as they earn revenue, it gets dispersed to all the different users of Stacker News on a like recurring basis, and it is in proportion to your reputation on the site. So if you're an active user and if you're constantly upvoting things that the rest of the community is also upvoting, and you're like recognized as like a trusted source, you get a larger share of that yield, which I just find fascinating. I feel like this is just like a totally new way to monetize a community and to get people on board. I wonder, do you think this idea of earning yield has and the ability to like get people excited and rush into Lightning in the same way that they've rushed into other DeFi projects and things that promise yield in the crypto space?
Yeah, you touched on something I think is a big blind spot is probably not the right word, but advantage that the Ethereum ecosystem has had with how easy it is to create tokens and do ICOs is that it creates so many owners. Everybody who has one of these tokens is a part owner in that project. And if those projects can design their token economics such that their users earn more tokens or something like that, then it's sort of self-fulfilling. Like the users are going to want to use the thing more. And you've seen some cool stuff with vampire attacks, where you have one project that's open source that doesn't have a token, and then another project just copies it but introduces a token and pays the users in that token to use the thing, and then the usage just like instantly migrates over from one to the next. Yes, TLDR is that the ability to get creative around ownership is extremely powerful, and if we can figure out a way to do that in Bitcoin, that would be huge. It sounds like Stacker News is onto it there. They're just using the pros. It's basically like a dividend. It sounds like it. They're getting revenue and then they're distributing the revenue out to the community. So, yeah, those types of things are super interesting.
Yeah, part of me starts to wonder if there's a potential to do like a vampire attack on Facebook or on Twitter in that same way, where you build up this new community and if you join, you earn the revenue that community generates in Bitcoin, and it doesn't have to introduce another token, and you still have full ownership of it, because like Stacker News isn't even taking a cut on theirs right now. It's 100%. Every dollar that flows in, or every sat that flows in, blasts out to all the users. But I guess it's a longer time frame. It's not like you're getting an airdrop of a bunch of tokens on day one. It's like you're showing proof that you're a valuable member of a community. And I wonder, like, I kind of think that this is going to be a tool that we can use to disrupt existing social platforms. Do you view it in the same way?
Yeah, well, so there was that infamous project BitTorrent that got pretty close to what you're describing. I don't know if you followed that one, but basically it would they like automatically created social profiles for everybody based on their Twitter, and then as soon as you claimed it, you would get a bunch of like clout.
Oh, that wasn't BitTorrent. That was
BitClout, not BitTorrent.
BitClout. Yeah, that's
yeah.
right.
Yeah, BitClout. And but I think the issue was because they had their own token, it falls victim to all the issues with fiat money, which is like humans were controlling the supply of the token. They can mess with the economics as much as they say, like, you know, we're gonna publish our token policy and not tamper with it. Like, you can't trust it in the same way that you can trust Bitcoin. But on the downside, you can't just print Bitcoins and motivate people with Bitcoins that you just invented out of thin air. So the ICO platforms have a better bootstrap mechanism because they could just invent their tokens. But it's not a hard money. You know, Bitcoin is a hard money, and that's kind of the challenge. It comes back to this like low time preference, build it right, take your time, versus like high time preference and you're kind of like get rich quick. I almost think of Bitcoin as like protein and some of the other projects as sugar. Like you get this like sugar rush, you can go really fast, but like, is it sustainable? I don't know. But
that's a good analogy.
I hope we can figure out for Bitcoin some ways to emulate some of those things into these Bitcoin projects.
Are there any particular mechanisms, like bootstrap mechanisms, that you'd like people to try that you haven't seen tested in the community so far?
Well, I think I sound like the old austere, investor here, but I think more because there's so much capital flowing in crypto generally, I'm noticing a lot of entrepreneurs just think they can like have an idea, go out and raise a ton of money, and then they'll be good. And I would like to see more founders who can grind a little bit more in the beginning to like write code themselves, use night and weekends, whatever. Get something out there that you can confirm that people want, and then go raise some money. And if you can do it, like I understand if the capital is available, might as well go raise and sell part of your business. But in theory, if you could ship V1 of your product and prove to people that users want to use this thing, then you should be able to raise at a higher valuation, and therefore whatever money you raise at that point is less dilutive to you. It's less costly to you. But it requires kind of the sacrifice up front to like work without, bootstrap. So my bootstrap tip is to bootstrap in the classic sense of it.
That's fair. Now, when you're thinking about investing in Bitcoin companies, do you draw a distinction between those building on the base chain or on Lightning? Is one preferable to the other? How do you do you think about the opportunity size differently, or does it matter at all?
It doesn't really matter too much. I think there's just a different set of what's possible in either of those things. Like Stack and Sphinx aren't possible on layer 1.
Right.
But like River does a lot of their work on layer 1. So no, I think it draws a different type of entrepreneur, and it, of course, like I said, draws a different use case of what's possible. But other than that, no, I don't really discern much between the two.
Now, I'm curious to know how big you think the Lightning Network is going to become in relation to Bitcoin overall. I think right now it's probably a it's less than 1% of Bitcoin's market cap. If you asked like someone to value Bitcoin and figure out like where is its valuation coming from, I think 99+% of it is coming from this store of value, digital gold narrative. Do you think over time that Lightning and some of the interesting applications being built on it start to grow the overall addressable market for Bitcoin, like in a meaningful way, where maybe down the road 10 years from now, 10 or 20 or 30 or 40% of Bitcoin's market cap can be then attributed to some of these applications building on layer 2? Or do you think it always remains that store of value is kind of the number one use case?
Well, I mean, market cap is a funny term, but let's just say, there's the classic sort of attributes of money. There's the store of value, medium of exchange, unit of account. Store of value is the digital gold concept. Obviously, Bitcoin is product market fit in that regard. But I just mentioned a few minutes ago about this idea of locking up part of your Bitcoin into layer 2 to create liquidity in layer 2 and earn a riskless yield on it. I think if we can actually manifest that concept, why wouldn't more hodlers put their, rather than use something where they're like lending it out for, people to use it for leverage, which is a lot of the ways people earn yield on their Bitcoin today, like you're lending it into the Lightning Network to help propagate Bitcoin further. That seems like a much better use of Bitcoin. So to kind of shrink this answer down, I think Lightning unlocks the medium of exchange use case to make Bitcoin a real money, and a unit of account. If people are going to use it for commerce, then it's increasingly like appropriate as a unit of account, and those use cases are extremely valuable. And if the liquidity yield concept bears out, then I think a lot of people will be contributing to Lightning Network liquidity with their Bitcoin, and therefore it's going to be a massive part of the money system that is Bitcoin.
Interesting. Now, the unit of account side of things, do you think that Bitcoin becomes a unit of account through some of the bottom-up organic approaches that we're seeing right now, where people are pricing their Lightning channel fees in sats already? It's like that's the only unit that matters if you're opening a Lightning channel, right? It doesn't matter how many dollars a sat is. You want to optimize for sats already, and there's a growing community of people who are optimizing for sats already and like denominating everything. Like even this podcast, when people stream in sats, I'm tracking month to month, seeing that the sat value has gone up. I don't really care, obviously, what the dollar amount is, but like I want to know that the sats are my kind of benchmark that I use. But the other side of it is when El Salvador comes in and says, Bitcoin's legal tender. It becomes this unit of account now. Do you think that we get to the stage where everyone recognizes it as a unit of account through bottom-up adoption or top-down, combination of the two?
Yeah, it'll definitely be a combination of the two. I mean, today you still pay your rent or your mortgage or your taxes in USD probably, so it's hard to escape that reality, and that's not going to change anytime soon. But one thought experiment is to think like in the year 3000, will USD still be the the standard unit of account or the global reserve currency? My guess is no. And that's because, like, if you look at the history of humanity, the prevailing currencies have always shifted. And they always, there's the Safedeen's book, The Bitcoin Standard. He looks through the history of monies, and you see a lot of them get corrupted through just sort of poor incentives with humans and politics and things like that. I wouldn't be surprised if the USD suffers in a similar way, which gives rise to countries like El Salvador saying, we're over this. We're going to use this other money that is immune from those types of things. And but it's going to take a long time for those things to play out. So I think I've noticed a lot of Bitcoin maxis are a little too quixotic and thinking like this will all be, we'll all be paying each other in Bitcoin next year. I think is going to take a long time. But the work is important, and it's really interesting, and it's a journey. And Bitcoin is inexorable; it can't be stopped. It'll just take its course, and I'm here for the ride.
So in that journey from maybe it's decades, maybe we measure this in decades, maybe it's hundreds of years, where the US dollar loses reserve currency status. Along that journey, how do you think about protecting yourself, like when you're talking about other founders building companies, how do you advise them to protect themselves? Is this weighing in at all in decisions today, or is this something that, like, if you're not a Bitcoin company, you're just not even thinking about today? Or do you think founders should be allocating some portion of their reserves, the money they raise, to Bitcoin?
Yeah, certainly 100% Bitcoin companies should be maintaining part of their proceeds in Bitcoin. 100% that should happen. But the question is how much. And so I've worked with plenty of companies on this. There's a lot of different thinking on this subject. Some people say I want to have either 18 months to 2 years of runway in cash in USD, and then I'll keep the rest in Bitcoin. Others are more aggressive, others are less aggressive. And for some companies, it's been like a massive, massive tailwind, right? If you had this policy years ago, you have like infinite runway. And I work with some companies in that have found themselves in that position. Now, non-Bitcoin or non-crypto companies to do the same thing, I am just starting to see that happen, but it takes a bold founder. It takes a open-minded board or group of investors. But I could definitely say that. I mean, everyone's a lot more confident in a bull market to do this stuff. So like, as Bitcoin comes down in price, and people have recently made those decisions to keep part of their treasury in Bitcoin, it's kind of a hard decision to defend. But when you're in a bear market or a bull market, then everyone thinks you're a genius. So I don't know. I think it'll happen more and more, but it's another one of these things that'll happen slowly.
And does that then change the way you think about a business? If founders outside of Bitcoin start to allocate part of their treasury to Bitcoin, do you then start to think about valuing the business differently, or is that still too small of a component to matter when we're talking about like an early stage startup?
Yeah, I think that would be a derivative of, it starts with treasury management, and then as that becomes more prominent, then maybe you start doing the funding itself in Bitcoin directly. That would be the next domino to fall, I'd say. And then after that is probably when you start valuing the businesses themselves in BTC terms. Maybe. I don't know. That seems like the logical path to me.
Right. Okay. Now, I want to get your view on Bitcoin adoption. And I want to start with this broad question for you of how you measure Bitcoin adoption. What are some of the key markers that you look for?
I mean, I don't sort of measure it like an economist would with some tools or something like that. I think as a proxy, I kind of just observe who's working on it, how much it's being discussed. One interesting thing is to look at like the Google search trends for the word Bitcoin over time, and the issue is it's almost like correlated to the market price of Bitcoin or the USD Bitcoin price, which is not a totally relevant signal because that's mostly the speculators. But frankly, I don't worry about it too much. I don't worry about like how fast is it happening because I know it's like it will happen, and I guess I think of it more on like a bottom-up approach rather than top-down. Top-down would be like how many people in the world now hold Bitcoin? Like is that expanding? How fast is it expanding? Bottom-up is what can we do to make it easier to become to earn in Bitcoin? So something like Stack, where people, their first experience with Bitcoin is through earning it, not buying it, they earn it. Or with like Fold, they're just naturally, they're going to spend money anyway, so might as well earn some Bitcoin rewards when I spend. You see what I mean? Like that grassroots way of looking at Bitcoin adoption is what I'm more interested in.
Yeah, that's really interesting because I actually had Elise Killeen and Oleg Mikulski on previous episodes, and we discussed earning Bitcoin as well, and they both were very bullish on the concept of it. Do you view then the next like billion people that get onboarded to Bitcoin come in primarily through earning rather than buying? Because that seems to be a distinction between Bitcoin and other crypto assets.
100%.
You earn Bitcoin, and there's basically no other asset that you're like, I mean, you can maybe make some exceptions for NFTs and stuff like that, but by and large, if you're invested or holding another crypto asset, you've bought it, or you've bought and sold on an exchange. Whereas now it seems like you're just not going to have to interface with an exchange anymore.
Yeah, exactly. So the exchanges they're the crossover, right? Because they have to handle the bridge between the incumbent ecosystem, financial ecosystem, and then crypto, because they're exchanging the dollars for the Bitcoin or whatever token it is. But with earning, you're converting your energy. Like if the human is its own battery that gets energy from the sun and food, it's like converting that energy into work, which converts it into value, which is itself a battery that you can go like reuse elsewhere to buy things. That's what Paul had a term for this. It was like a natural coiner is what he calls, because they earned their Bitcoin. They became a Bitcoin through like the most natural way, which is through earning. And okay, here's another interesting thing with his model is there is one big blocker that we haven't talked about to this group. If we're going to bring it to the next billion people that don't have bank accounts, they're sort of like financially disconnected. What else might they not have? Phones. So how do you solve that one? If you go onto stackwork.com, I think there's a tab for workers, and you'll see it's this great section that says, "Don't have a phone? ? Earn one." And he basically has local dealers in these countries like the Philippines and Argentina and elsewhere, where they will give out these cheap Android phones that have a custom version of Android loaded. So this is, by the way, the way how you get around the duopoly is that you own the phones themselves and the OS with Stack and Sphinx preloaded on the phone, and then the only way to unlock the phone is they do the jobs, which pays off the phone, and now they have a phone and service and a communication tool and the ability to earn money. So
that's incredible.
It's so cool. It's such just a beautiful vision of how you get economic empowerment, you get connectivity, you get a lot of things out to these people who need it the most. And I would much rather be focused on entrepreneurs and technology and people building to that end rather than people building to like sell a picture of their dog for $1 million or whatever it is.
Right.
It's just so much like more potential there.
Right. Now, I want to dive into the phone and the hardware component of this, and whether or not do you think that we get to the point where over time people everywhere are using Bitcoin or Lightning phones, privacy preserving phones? It ties in a little bit to the personal server concept that Umbrel and Start9 are kind of pioneering. Impervious is building a browser. Are we going to have Lightning laptops? Like, how far do we extend into the hardware world to get adoption around the world?
So first of all, I don't think it doesn't have to be ubiquitous. Like, we don't need to dream of a future where there are as many Lightning phones as there are Android phones. But I do think that there's an appetite and a strong use case for them, and that they will happen. And as they happen, again, it'll create a check on the incumbent phone systems or OSs. So if like Apple and Google duopoly are banning certain things from the App Store, but those things can't be banned in sort of the Bitcoin Lightning ecosystem of phones and apps, then it'll make them think twice, like, oh, well, I'm going to lose my users to this other thing if I ban this thing that they really want. So I just believe that even if all Bitcoin ever does, even if USD does survive as like the global reserve currency, the fact that Bitcoin exists will force them to be more careful about certain policies, force the people managing the monetary policy, because if they don't, there's this alternative that people will switch to, and that's a powerful, powerful thing.
Right. Yeah. I guess, and it improves accountability all down the chain. Right. It's not just the USD. It's Facebook. It's Google. It's Amazon. It's every service provider in your life now has to look out because there's an alternate system that people can opt out into.
Yeah.
I'm curious to know your thoughts on whether or not you think Lightning will be more impactful to, let's kind of break the world down into like developing world and developed world. Where does Lightning have the biggest impact in your view over time?
Yeah, good question. I think developing worlds is where, like Elizabeth Stark will say, I want to help bring Bitcoin to the next billion. And who has the strongest use case for Bitcoin? It's not you and me. It's people who don't have the ability to earn on their own, or don't have the ability to communicate freely, things like that. So that's where I think the energy should be focused. And but I think it's going to come from both directions. I mean, it's such an interesting thing, and you have giant institutions. One of the largest financial money movers now is Cash App, and they're actively implementing Lightning, and so it's going to come from that direction as well. And but I think the community is best off focusing on probably the developing world than the developed world in the short term.
Interesting. Yeah, I mean, when you speak of Cash App and also Chivo is another top-down one, it's crazy to think there's 75 million people that have access to a Lightning, can use Lightning on their phone with the apps they have installed. Because Cash App's with 70 million people, if they have Bitcoin, they can use Lightning today. Yeah. And there's another 4 million on Chivo. It's like, we onboarded 75 million people. I mean, granted, not everyone's using Lightning and not everyone knows what it is, but they all have now the tools to use Lightning, which I never would have guessed 2 years before. So crazy to see how fast that's happened.
Yeah, that was one of when we were first digging in. As investors, I made the point that I think that how you go into like a corner store or something and it'll say cash only. The sign says cash only, yeah. And the reason they say that is because there's no credit card processing fee, so it's cheaper for them. My view is that you'd start to see like crypto only or BTC only signs, and the terminals would be the Square terminals, and they would have Lightning support, and then the merchants would encourage people paying in Bitcoin and Lightning, because they, just for the same reason they encouraged people, the shoppers, to use cash only, and some of that is starting to happen. So it's really cool to see it.
Have you seen the Coin Corner Lightning card? I tell everyone about it.
No, tell me about it.
It's a Lightning card, like a physical card that you can tap as an NFC card. You can also use your phone and tap your phone at any terminal. It uses LNURL, and the payment is made entirely on Lightning. So like a Coin Corner merchant is effectively like using the Coin Corner exchange and can accept funds in whatever currency, fiat or Bitcoin or any of the other crypto assets. And the person paying could also do the same. And you could even interoperate. It could be a Cash App user. Eventually, if Cash App decides to roll out a Lightning card, they can tap on a Coin Corner merchant, pay over Lightning, and the Coin Corner merchant gets the money in their preferred currency. It's just mind-blowing stuff.
So they manage the exchange too?
Well, Coin Corner is an exchange, so
okay.
That's their like bread and butter, and then they just built this to enter into the retail space. But I imagine someone like Cash App or another big retail player could jump in and instantly turn on millions of terminals, or instantly issue cards to millions of members if it's a bank or a financial institution.
Yeah.
So I agree, really, really incredible potential there. Okay, I got a couple more questions for you. So we've now talked about value creation and how Lightning creates value in different ways, maybe in developing and developed world. Do you think, I want to talk about value capture now, because when I think about the ways technology captures value, there's like there's two kind of poles. One where you have things like Linux, you have the internet that create a lot of value for a lot of people. Basically, no value gets captured by the technology, or I guess you could say applications built on the internet capture value. That's fine. But then you have the other side where you have Facebook and Google create a ton of value and also manage to capture a lot of that value. How do you think about? I think the Lightning Network itself obviously is not capturing any new value. It's a tool to relay Bitcoin, but what about the companies building on the Lightning Network? Do you think that any of them do you think it's possible to build a business model similar to Facebook and Google where they can also capture a lot of value? Or does the fact that they're building on Lightning make it so that they have a lot more competition and it's a lot harder to build to capture as much value?
Yeah, super. It's a great question. And in like Web 1 and Web 2, you think of the protocols like HTTP, SMTP, like these. There's not a company behind them that sort of owns them, or what. It was like these research projects. The companies were the ones that built on top of them. So okay, if you take a Lightning Labs who created LND, which is that's like that is obviously the prevailing standard for the Lightning Network. Most of the Lightning Network traffic is run on LND. Lightning Labs is not going to monetize LND, but they are experts at the Lightning Network and the things that are needed to operate a Lightning Network node. And so they're going to be able to create services for people running nodes that those people are really going to want. And maybe they'll have competitors for those services, but they also will have a massive advantage in just being like experts at this thing and understanding the nuances of liquidity management and things like that. So I'm very bullish on their ability to create products that can will have a business model that can fund the business, but that are products that node operators want and need to run their node on the network. Like things like they could do it themselves, but it would just be much more convenient if they worked with Lightning Labs. The best example is their liquidity management services with Loop and Pool. Okay, so that's on like the protocol layer, and then or the platform layer. The application layer, things like Fold and Stack and Sphinx, Galoy. They all have their own business models. We kind of addressed that earlier. It's like Galoy might have a recurring revenue model, and Stack will have a model where they're delivering structured data back to big businesses who run machine learning algorithms or whatever it is. So I think on the application layer, it'll be a lot more similar to what we see today in internet applications. On the protocol layer, it will be, for Lightning Labs specifically, it will be services to people running, to these application providers or anyone running a node on the Lightning Network. And then there's some in-betweens, like I mentioned, Voltage. They're like nodes as a service. So that's somewhere in between an application layer and the platform or protocol layer. There'll be plenty of things like that. SuredBits is another team that comes to mind that's creating DLCs. So that's like somewhere in between application and platform layer. So I think entrepreneurs are best to just be hyper-focused on solving customer problems, and you will be solving some problems that your customers are willing to pay for. And so knowing where to apply your business model or where to monetize versus what to give away for free, so to speak, is an important question to ask yourself.
Right. Is there anything that's really surprised you about the Lightning Network? This could be applications, infrastructure, growth, anything in the last 3 or 4 years of following it?
Yeah, just that, and Elon has tweeted about this a few times, that money is an information system. And when Paul kind of came up with the insight of Sphinx Chat, which is using the sort of memos on a Lightning invoice to transmit messages rather than value, it occurred to me like, oh, this is all just an information system. And moving data could be moving value, like UTXOs, or it could or balances on a Lightning channel, or it could be moving messages. And that has completely changed my like the way I grok money. The other interesting thing is I like to, because I'm not as technical, I'm not like, coding a Bitcoin core developer, coding these apps. I have to use proxies to understand what's happening, like metaphors and things like that. So for me, the Lightning Network, I always think of like when the United States was first being settled and you were creating these like train roads systems, these networks, and how the Lightning Network is that. It's just like sort of a digital version of that. So you have highly connected nodes are creating an important real estate for themselves in this new virtual world that is the Lightning Network. Tying that back to this whole liquidity concept, like if you create a hyper-connected node right now, which there are a lot of people competing to do this, there's that one like community of people who are, you know what I'm talking about? Plebnet, yeah. Yeah, like those people, like I wouldn't be surprised if all those people are like the future like land barons of the new internet, because they spent the time to invest to develop the infrastructure, and that infrastructure, that real estate on the Lightning Network is going to be extremely valuable, because they're going to be hubs through which payments are routed, anyway, that's been kind of a nice thing for me to help understand this network better, is to like visualize it in a more physical way.
Yeah, I've also heard the analogy of like cities, and that like all these hubs are just different cities on, maybe it's the U.S. highway system or something like that, where you can connect through to different cities. And I wonder if you think we see the same level of, I mean, I guess if you look at the U.S. at large, the cities are a large, like in New York, for example, there's 10 plus million people in that area. That's an enormous percentage of the whole population in New York State, in New England, in that kind of like northeast area. Do you think that Lightning has the similar level of centralization over time? Like, I don't want to call it completely centralized, because there are hubs all across the nation, right? But in smaller regions, like some of these cities are the single attraction that all people flow towards, all jobs flow towards. Do you think, I guess, we see a similar level of centralization in Lightning?
Absolutely not. And the reason is it's you don't have the friction of physicality. So in a city, like people like, they live there, they raise their families, they have all their stuff there. To just say like, well, this is too expensive for me, so I'm going to move to some suburb. Their jobs are like, they just can't do that. But let's say in that same example where the Lightning Network is there's some New York City of the Lightning Network where there's just a lot of activity and very short routes from one node to the next. Well, if the hub of New York City starts to become too expensive, it's just like the speed of light to find a new node that is also connected to the destination node and just go the other direction. And so there will be fee markets on like these different routes and how to connect to things. So I think it's almost like if you were to put the time, like the progress of humanity, like put it on like fast forward and see where different like pockets of energy form and collapse and move around. Like it does move. And so I just think in the Lightning Network, you will have movements. They'll just be a lot faster because there isn't that friction of physicality, like I said.
I was thinking more like if a single node was New York, right? Like if do you think that we get to the point where there's just, you have to have a ton of liquidity, you have to have a ton of capital to become a profitable routing node? If we get to the point where there's maybe all the big banks decide we're going to be routing nodes now, well, all of a sudden maybe it's not profitable, or if you're a hobbyist node operator, do you think that pushes them to the sidelines and all of a sudden like capital becomes the constraint that centralizes things rather than location?
So Alex Bosworth writes a lot about this, and this is where like the technical elements start to get above my IQ, but my understanding is that number one, plebnet, like they've proven that you can become a hyper connected node as just an individual pleb, like just a function of your own energy and reaching out, setting up channels with people. But let's just say there was the single node that is New York, and just a zillion people are connected to it. I would guess that it creates its own like congestion issues potentially, or it becomes harder to manage the liquidity of all the various channels for that node, and so naturally there'll be opportunities for subnets or different routes around that New York City node to get to the destination more efficiently than always going through New York. Just a guess, but these will be very interesting things to observe over time.
Interesting. Okay, one final question for you. We've already talked about a lot of projects building on Lightning, but is there any one in particular, maybe one that we haven't covered, that you're excited about, or any predictions you want to share on the next year for Lightning? Anything that you're particularly paying attention to?
I've always loved tracking what Chris is doing with shared bits with DLCs. I think having oracles that can serve as like a smart contract on the Lightning Network, I think that'll be really interesting to see how that plays out. I think being able to support multiple assets on the Lightning Network is another very interesting concept that I think will bear out in 2022 or maybe 2023. And that's, now you're rethinking the Lightning Network as literally the roads, not the roads and the cars. Like right now, I think people think of Bitcoin as the roads. It's like both the transmission and the actual currency that's being transmitted. But if you sort of decouple these things on, okay, the Lightning Network, these are the roads to transmit things, but what are the things you're transmitting? It doesn't always have to be Bitcoin. I think that'll be a major innovation in the next year or so.
Very cool. Okay, well, I really appreciate this. I feel like this was a masterclass on investing in Bitcoin and Lightning. Where can people go to learn more about you and Craft?
Yeah, well, first of all, Kevin, thank you for having me. I love talking about this stuff. It is, I think it's like one of the biggest things happening in our world right now. I'm on Twitter. I'm at Murr, Murr, and my email is bmur@craftventures.com. So hit me up if you got questions or want to jam on Lightning stuff. But yeah, I'm a huge fan of everything, all the entrepreneurs building in this space, and yeah, just love seeing how it's all transpiring.
Well, I learned so much from this conversation. I hope listeners did too, and I hope we can do this again sometime.
Awesome. Sounds good. Thanks for having me, Kevin.
Welcome to the Lightning Round presented by Voltage. Voltage is the industry-leading provider of Bitcoin and Lightning node infrastructure. In fact, many of your favorite apps and services already use Voltage to scale their business quickly and easily without maintenance. Voltage also offers an inbound liquidity product called Flow, which helps you as a node operator get inbound liquidity easily. Overall, Voltage is creating the industry standard suite of non-custodial products, helping brands, engineers, and startups scale. To learn more about Voltage, visit voltage.cloud. Lightning round, here we go. In the last 7 days, you guys sent in 26,479 sats, 19 different supporters, 22 different messages. Real quick, let's run through the top 5 supporters. Thank you to everyone, but a special shout out to Mary Oscar with 7,154 sats. Anonymous user came in at 4,410 sats. Jeffrey with 3,430 sats. Peter with 2,864 sats. And Y with 2,842 sats. Now, let's get into some comments and questions, but before that, there's a really cool feature that I got to tell you guys about. Fountain is rolling this out as we speak. It's going to be live either right when you listen to this episode or the day after. It is really cool. I've been testing this with them for the last couple weeks, and basically what it is cross-app comments. So if you are on Fountain, you're going to be able to see a list of comments from any participant in any Lightning Podcasting 2.0 app. Someone from Breeze can write a comment on my show. It can appear publicly on my show's feed now, and someone else from Fountain can respond to that comment or create a comment of their own. It's just as if you have a native comment feed like on YouTube or on Reddit, but any Podcasting 2.0 app can participate in this. So it's cross-app comments for podcasts, which has never existed before. It's a really cool feature. And so if you're listening to the show right now on Fountain, you should be able to go into your app, open up the player, and you should see next to clip and boost, there's going to be an icon that says comments. If you click that, you'll be able to see the comments or make a comment yourself. So definitely check that out if you're on Fountain. Now, let's get into the questions for this week. First, we have why. And why actually sends in 3 questions. First says, the creators need to get creative with the abundance of newly emerging tools, so much room to play and experiment, but I'm not yet seeing really out-of-the-box gamification of micropayments. I agree. There's a lot of design space here that has not been tapped into. There's a lot of potential remaining for gamifying payments, and I think it's starting to. There are some examples where I'm starting to see this actually happen, and I think there's going to be some really cool second-order effects once more people learn about it. But one of the really cool gamification strategies is one that I've mentioned before on Stacker News. They are using revenue generated by their new job board to reward all users of the platform with sats. So if a job poster goes in and pays 10,000 sats for a job posting, those 10,000 sats are now funneling back to users of Stacker News in proportion to their reputation on the site. So that one I think is a really cool example of how you can kind of like monetize, or how you can kind of bootstrap a community with money at the core of it. And I imagine this is gonna have some really cool second order effects, and I hope it inspires other people to do really interesting things. But you're right, why I think we need to do a better job of experimenting and trying new things, because there will be a lot of new business models unlocked by Lightning. Second comment from Y says, payments as easy as likes. If every like and upvote on the web over the last decade were worth a sat, how many Bitcoin would have flowed? That's, yeah, an incredible thought to think. It's you see all these tweets getting 100,000 likes, they go viral, and the likes are great. They're a dopamine rush, but as soon as that is done, as soon as that dopamine ends, and you stop trending on Twitter, it doesn't leave you with anything. You don't have any money that you can then use. It's your time and effort into crafting a funny tweet or an interesting tweet. It's kind of just gone after that point. Obviously with Lightning, you can hang on to that, and you can turn that creativity and all your ideas into money that can then be spent however you want. Third comment from Y. All on episode 28, so Y must have really enjoyed the last episode with Albie. He says, trying to imagine how a content creator with a massive following like Mr. Beast, PewDiePie, Mark Rober might leverage value for value and Lightning to engage with their audience. Tangentially, who's the biggest non-Bitcoin content creator whose existing formula might best take advantage of Lightning, WebLN, LNURL, if only they were aware of it? That's a really good question. And the short answer is I actually don't know. The first part of the question, how a content creator with a massive audience might take advantage of this and might use Lightning to engage with their audience. I think right now, for some of the people you mentioned, Mr. Beast, these guys with millions of subscribers and fans, I think right now we're still a little bit early for them to be able to introduce this to some of their fans. I say that, but now actually I kind of realize like Cash App has integrated Lightning, so if there was some interesting gamification, some interesting video they created, got people involved and got people supporting, these guys have done, I know Mr. Beast and Mark Rober combined to do a donation for planting trees. I could easily see them doing a donation over Lightning for some similar cause. It might be still a little bit early for that, but we're quickly getting to the point where, tens of millions of people in America now have access to the Lightning Network on an installed app on their phone. most of them is going to be Cash App, but Strike as well, and a few others. So that's pretty cool to see. And I imagine it's not going to be long before one of these big creators does get involved. To the second part of your question, I think the biggest non-Bitcoin content creator, I just keep thinking about Joe Rogan. He seems like he's very aligned with the Bitcoin community on a lot of things. He hasn't expressed an interest in Bitcoin really, from what I've seen at least in the last couple of years. But he's had on Adam Curry a few times. We've had Adam Curry on for talk about podcasting 2.0 and value for value. He's got one of the biggest podcasts. It kind of just makes sense that, he use the Lightning Network to support himself. He's been at the center of this Spotify censorship issue. Seems like that would be the guy that I would, if I had to pick one kind of non-Bitcoin content creator who would leverage Lightning, I'd probably pick Joe Rogan, but it doesn't seem like he's quite there yet. Peter then asks a question. Peter says, to grow the user base, do you think it's more important to first introduce a new user to Bitcoin in general before podcasting 2.0, or vice versa, or maybe it doesn't really matter? I think the way that most Bitcoiners are introduced to Lightning is it's a linear progression. It's a proof of work progression almost. We go through the process, we go through all the different hoops, we do the work, we learn about Bitcoin, why it's important, we go buy some, then we learn how to store it, then we learn how to move it to Lightning, then we learn how to spend money on Lightning, how to use invoices and all that. Then we progress to the point where we start to spend it. But at that point, there's an interesting, it doesn't quite work for most people when you go through that process and you learn about how Bitcoin is this sound money you should never let go of, and then you go to spend it. It doesn't make sense for a lot of people. Some people who love experimenting with new technology, love using Lightning. I imagine many listeners of this show are like that, and they're fine with that, and that's great. They're willing to buy Bitcoin and then spend it after learning about why it's sound money and it should be held on to. But I don't think that's the process that most people are going to go through when we're talking about onboarding the next 100 million or billion people to Bitcoin. I think most of them are going to come from the direction of earning it first. So their first interactions with applications on Lightning is going to be earning Bitcoin without even having to own it themselves. And in many cases, they may not even know they're earning Bitcoin. So I think most people are going to approach podcasting 2.0 and all of the Lightning apps through the lens of first earning and then spending some of it, and then the remainder they can store, and then they may come to the realization after that Bitcoin is this store of value. So it's kind of a reversal of the more traditional path that I think a lot of myself and I think a lot of listeners here have gone through, where we approach it from a store of value first. I think it may be reversed for most future Lightning users. Thanks again for all the questions, guys. Really appreciate it, and can't wait to see what you guys send in. I'll check the public comments feed on this episode, and you'll be able to see each other's comments. It'll be really cool, and I'll see you guys in a couple days.